Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Matt Johnson of Johnson Venture Partners. Matt, thank you for joining us.
Thanks. It's a pleasure to be here.
So what was your background before investing in early stage companies? What did you do before this?
It's a good question. Believe it or not, I've always known that I wanted to be an early stage investor. This started back when I was an undergrad in college, and I just didn't know that it had names like angel investing and venture capital and early stage private equity. But I can remember pretty vividly sitting in finance classes, and we would be analyzing financial statements or analyzing the stock price of some household name corporation. And I remember thinking to myself, there's more to the story than this. There's got to be so much more behind the curtain. And so I developed this curiosity. And what about these companies when they first got started and long before they became these mega corporations as we know them today? So I was always drawn to the origin story, the founding story, and the entrepreneurs that started these companies, that many of which we now interact with every day. So I guess out of just sheer curiosity, I discovered this world of early stage startup investing, self-educated, acquired enough knowledge to be just enough to be dangerous, pulled some capital from high net worth friends and family and just started doing deals. That was 14 years ago. So started investing at a very, very young age and have been fortunate enough to have enough success to keep that going and continue to do what I enjoy and do what I love. I haven't always managed my fund, Johnson Venture Partners, full time. I've had other positions along the way to help support me and my family. I've worked for a major research university. I've also done work for some nonprofits that support the entrepreneurial ecosystem. But I've always been in and around this ecosystem, this space, just now doing it full time as an investor and loving it.
Well, that's great. So what excites you right now?
Our fund is agnostic. And so to pick a specific sector is kind of difficult because I have an opportunity to look at a variety of industries and sectors. But if I had to pick one or two, obviously machine learning and cognitive computing, what the general public refers to as AI, many opportunities there. Blockchain technology, I feel, has the potential to be revolutionary in many different industries. Cybersecurity getting a lot of attention these days. So there are some of the hot spaces that are attracting a lot of venture funding right now. But I guess as an asset class overall, I'm really excited about its extension into more of a mainstream asset class. It used to be this regarded industry. Not a lot of people knew much about it, operated not so much in secret, but it just wasn't a traditional asset class. It was considered an alternative. And I'm just glad that it is getting the attention now with more participants entering the capital market, making more risk capital available to fund innovation and fund startups. One could argue that maybe too much funding, but that's a conversation for another podcast.
It's great to see more people coming into it. It's broadening out to different sectors and diversifying in a lot of ways. And people are taking on more risk as well. So it's great to see it becoming a little bit more mainstream than what it was before.
That's right. I agree.
So what's your advice for people investing in startups? What do you tell them to do before they write that first check?
Yeah, that's another great question. I would say, first, you don't have to do it alone. There's ways now to leverage the power of technology and also network effects so that you can find like-minded investors with similar strategies and goals and also source great deal flow together. Learn from one another, help with due diligence, of course, with negotiation. And so there are just a lot of ways to join groups if you want active returns, if you want to get involved with a group or with the startups that you're investing in, or if you're just seeking passive returns, but you find the asset class interesting, then invest through a fund and let a professional fund manager, professional VC sort of go out and find the opportunities and just forward the returns. So it's come a long way. The industry as a whole has changed radically just in the last 5 years, 10 years, certainly. So my advice would be that you don't have to go it alone. And there are lots of ways to band together and fund deals.
Well, so on the other side of the table, what do you tell startups before they launch that business? What should they do first?
I think that if they're looking to raise capital, which not every startup needs to raise venture funding or angel funding, but if they are seeking to raise capital, get to know your audience. And in this case, it's the investor. It's either a professional fund manager like myself, or it's an individual angel. Perhaps it's an institution. So you get to know your audience and get to know what their goals are, because in a way, they're your customer. And I try to distill it down to as simple of a concept as possible. I think there's a tendency to make raising capital too complex. But I just tell entrepreneurs, look, as an investor, what do I want to accomplish? What is my goal? And actually, what is my responsibility to my investors? I want to buy stock today for $1 and sell it later for $20. It's not easy to do that, obviously, but it is a very simple concept. I think if more entrepreneurs understood that and presented their opportunities in that way, sort of showcasing from a quantitative standpoint, look, here's how you're going to buy stock today for $1 and sell it down the road for $20 or $30. And so that's my advice typically for first-time entrepreneurs that are raising capital.
Well, very good. So let's talk about the state of venture investing. You've been in the industry 14 years, so you've seen a lot of history go on already. But how do you see it evolving today? What changes do you see coming up?
I see technology starting to shift our industry. A lot of platforms are focused on investment management and assisting fund managers like myself and others to be better organized, sharing of information, sharing of due diligence, document control, executing fund transfers, funding transactions. And that's an interesting space. It's a difficult problem to solve. I think that there are a handful of these platforms that are getting close to solving this problem for us. So that's really what I'm keeping a close, watchful eye on some of those platforms to see which one emerges as the market leader, which one provides the best solution for investors to better manage the process and keep track of deals, sharing of information. It's all vital. It's just the industry has been, it's not as mature as others. It's certainly not as, I guess, well developed as, say, some of your trading platforms that you would see like AnyTrade or TD Ameritrade. I mean, we want those same features and that same transparency, but it's been difficult to get there. But I think we're close. So I'm excited to see how that plays out in the next couple of years.
And so you think technology is the biggest change coming up in impacting investors' work by making the data more transparent? You see a lot of VCs go after data analytics and try to make data-driven suggestions. How far can you take that approach before it stops working?
Yeah, I see that the access to data, use of data is becoming more and more prolific. I, of course, subscribe to a few industry reports and sources to use it myself, but it can also be overwhelming. And so I think adoption is going to have a lot to do with just how much time investors want to spend on that side of the research and that side of the diligence. Are we going to see a day when machines make the investment decisions for us? I think you're already seeing a little bit of that, or at least it's being attempted. I'm a little bit more old-fashioned, I guess, that I like to put companies through a process, of course, using data, particularly around market research when it's appropriate and when it's available, but still more of a manual process for me right now.
Well, that's great. Well, let's talk about your fund. What is your investment thesis and what's your criteria for looking at deals?
Yeah, so we're a small fund. I guess the technical definition would be micro VC, a micro venture capital fund. $5 million. So we're doing smaller check sizes and smaller rounds, true seed stage investing, some small Series A, early series round investing, but primarily seed stage. Industry agnostic, as I mentioned earlier, so we don't focus on a particular industry sector. The portfolio is heavily weighted towards software as a service, B2B SaaS models. I've also got some medical device and healthcare related startups, some manufacturing and materials, media and communications, and then some consumer products. So it's a little bit of everything. It's a diversified approach, investing up to $500,000 per company, although the average is much less than that. Geographically, we focus on the Southeast. So the fund is based in Atlanta, and I look at surrounding ecosystems in the Southeast, Georgia, Florida, and the Carolinas, Research Triangle Park, Tampa, Orlando, Nashville. So we like to keep it focused on the Southeast. I have discretion to invest nationwide, so I can reach out into other markets, other geographies, have a couple of Silicon Valley-based startups in the portfolio that are performing really well. And that's about it. I try to keep it simple, low valuation under 5 million or revenues to justify higher preferred equity deal structure, and try to keep it consistent.
Well, great. Can you talk about one or two startups that fit that thesis, perhaps a portfolio or two?
Yeah, I'd love to. I'm really excited about one company in particular called NewSci, based out of Tallahassee, Florida, actually. And it's a machine learning, cognitive computing, AI company. They develop AI-enabled solutions for clients, almost like a software plus consulting model. But what's interesting about this is in working with clients, they're developing some pretty innovative core technologies that have standalone market value and can then be spun out, sold off. They're working on one project in particular right now that's quite exciting. It's a 911 emergency call simulator for training 911 operators. So this is a training tool that will interact with a new hire, again, for training purposes, and it behaves exactly like you're in a live call environment. And so the old way of doing that is role play. You have a coworker and a script that you read from and pretend to do the calls, whereas this is a much more immersive and interactive and real-time solution. Excited about that one.
Well, great. So you see a lot of startups out there, and aside from fundraising, what do you think the challenges are that startups today face? Is it regulatory? Is it the market? Is it technology? Or is it something else?
I think that there's, like I said earlier, there's a tendency to overcomplicate. There's also a lot of noise. There's a lot of advice. It's difficult to know who to turn to, where to turn, what do you discount, what do you take to heart. There's a lot of conflicting data and a lot of conflicting advice and information that we're bombarded with every day. So I think for entrepreneurs and for investors, it's just staying disciplined, setting some parameters for, if you're an investor, setting parameters around your strategy and staying focused and disciplined on that. If you're an entrepreneur, staying focused on delivering a quantifiable value prop for your customer, being obsessed with the customer, and trying as best as much as you can to eliminate noise and distractions. Staying laser focused, staying disciplined, and focus on execution.
Great. Well, you see a lot of applications and sectors out there, given your position. If you had to pick one or two as good immediate opportunities for investors to pursue, what sectors or applications would you call out?
Yeah, again, so cybersecurity is getting a lot of attention. There's going to be major shifts in that landscape. So I'm, again, keeping a watchful eye on the cyberspace. Perhaps machine learning, blockchain, healthcare. I don't have much experience in life science investing, but I'm trying to expand into that space, into that domain a little more. Of course, I'm relying on subject matter experts. It's as an agnostic fund, it's hard to know about all industries and all sectors. And so I rely pretty heavily on SMEs to come in and advise me accordingly on the science or the technology. But those are the ones that we're looking at. Automation, of course, we're going that way with so many jobs and so many industries. So those are the ones that I would call out.
Great. Well, they sound promising. In the last few minutes that we have here, what else should we cover?
I think that's about it. I'm interested to learn more about the Austin landscape, even though I tend to invest in the South. I haven't ventured into Texas yet. So maybe afterwards you and I can catch up on all things Austin and Texas and see if I can get plugged in over there, because I do believe in diversification, and I believe that you should diversify not just in industry, but also in geography. And so let's connect on that.
Absolutely. We can talk about Austin's history has come from the enterprise space. So it's very strong on enterprise software. It's doing great on blockchain and some of the AI applications because they're right down that path. And they have a very strong element for consumer product goods. The new millennial brands coming up, got some very strong players here as well. We have a new medical center, so we're looking to see more healthcare come up, but traditionally we haven't been that strong on it. In Texas, the place for medical is Houston, given the size of the complex down there and the number of research institutions. All the medical devices and therapeutics usually come out of there. but Austin's the place for the tech and the consumer product goods for sure. But glad to share with you more after the interview. I want to thank you for taking time today. How best for listeners to get back in touch with you?
Right. So you can check us out online, website, Johnson Venture Partners. Address is jvpfund.com. There's an email link at the bottom. You can also read more about me in my bio. LinkedIn is a great way to connect. / Matt Johnson LinkedIn. Pretty clever how I did that. And those are really the two ways to connect.
Great. We'll put those in the show notes. Hope to have you back for a follow-up soon, and want to thank you for your time today.
Thank you. I enjoyed it.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.